This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. Now here's your host, Gabriel Shahin.
Hello, this is Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth, here on every weekend talking about all important topics of personal finance. My job is to go over the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of my colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON. Like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can get this episode and any one of our previous episodes as well through Spotify, iHeartRadio, podcasts, you name it, folks. And we have this knowledge center, which is pretty cool. And that way you can get so much better and more specific recommendations, ideas, strategies for you in your situation. Been around for about a year and almost have already 1 million views. Now, I'm the president of Falcon Wealth Planning. We are a fee-only, non-commissioned, true fiduciary, folks. And we talk about all important aspects of personal finance, like where you are today, how retirement looks like, talk about taxes, insurance, estate planning, investment. Folks, you name it. Anything that involves a dollar sign, we can help you with, folks. And we are offering a free financial assessment where we'll give you 1 to 2 meetings, 1 to 2 hours of our time, folks, at no cost, folks. We'll be happy to do that for you. And it doesn't matter where you're located. As we have offices all across the country, we are happy to help, folks. Give us a call. Our phone number, 855-963-2526. That's 855-96-FALCON. Like the bird, where we can help put together this assessment for you that can answer those questions that you may have. Because it's crazy. My job nowadays is really just helping people like you, but in masses, whether it's through the radio show, the podcast, whether it's through social media, whether it's through content like on YouTube that we have hours upon hours upon hours of videos that are there just to help you on the questions you may have. And you're wondering, how am I getting the content for this? Well, you're providing it. You're sending us information at radio@falconwp.com. That's radio@falconwp.com. You're giving us topics of what to discuss. So, for example, I have some people that want to learn about solo 401ks. I got some people that want to talk about Social Security, Medicare. I have so many videos that are coming out. I had a nonprofit, I had a church reach out to me and say, can you help us to help our people have more efficient ways to donate to our congregation? So that video is going to be coming out here in the next week or so. So that's really what I'm doing these days. And so I thought I would talk about hot topics, right? This is another information that I received from somebody that sent it to the radio email address, and that is about spot Bitcoin ETF. I talked about last week, and I talked about last week how it kind of starts up, then it goes down, so on and so forth. So I mentioned that to you, and that's kind of what's happened. Bitcoin ETF and even Bitcoin in general, which got up to 48,000 with the fake news of the SEC, then upon approval, the fake tweet, I should say, and then dropped down to 45,000, even less than that, got to 42,000. This is after the ETF came out. 11 spot coin ETFs have come out already, and it drops. People thought billions of dollars were going to be going into this, massive inflows, but that hasn't been the case. Interesting, don't you say? All I'm here to tell you is this, is that what are you doing now that these are coming out? Some people think it's a good investment. Some people are avoiding it. I just think you shouldn't rush to do anything. And you could see this with the volatility that's happening in the market. Some people will say, well, when gold came out back in, 2004, early 2005, late 2004, people were discussing like, hey, it shot up. But yeah, gold was just continuing to shoot up during that time. And it did yet end up keeping those levels of going up. But when those ETFs did come out for gold back then, yes, there was an up run. But gold has a usage, a utility value, a security behind certain government and their currency. So there is more of a use for it than there is with Bitcoin, with cryptocurrency, with the ledger. I mean, it's just a lot different. And so the idea is there's still so much unknown. Just because the SEC came out with it, keep in mind the SEC's job is to protect you. They came out with this or approved a spot coin ETF, Bitcoin ETF, because people are already investing in it anyway. You get what I'm saying? So at least now there's more oversight on it versus people getting taken advantage of at FTX or Binance or some of these other companies that are going out of business because of just literally poor and no regulation. It's crazy to me that actually, now that I'm just kind of thinking about this out loud, that the Bitcoin, like cryptocurrency community it's kind of weird. They're asking for regulation. I've never heard of anything like that actually before. It's yet again just kind of interesting. Now, there are 11 different ETFs to choose from. So I'm going to actually go over a few of those today. But the idea of just the big picture of this is like, okay, how does this affect you? Because you have one of the most popular ones that has $26 billion in this fund, the GBTC, the Grayscale ETF. That's now an ETF. Used to be called a trust, Bitcoin Trust. Now it's in the form of an ETF. It's by far the largest. Now check this out. Their fee is 1.5%. Like from a capitalistic point of view, that's genius for the manager of the Grayscale. But man, that's rude. You have people that bought into early on that they probably had those fees anyway. But now you have other ones like the iShares, like the Fidelity ones that are only 20 basis points and offering few free months even for going into them. And they're offering those at no cost, where this one's like over six times more expensive. 7 times more expensive, almost 8 times more expensive, right? Because it's 1.5% annually for Grayscale, and it's only 20 basis points, 0.2% for Fidelity and iShares. And so those are some of the biggest names in there, and they have access to the most available research. And if they're into the space, they're trying to monetize it. So they're going to put a lot of resources there. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, Certified Financial Planner, your host of More Knowledge, More Wealth here on every weekend. And we're talking about all important topics of personal finance. And it's just interesting that so many things that are coming out right now, especially with the spot Bitcoin ETF, that this is what you guys are interested in. And I'm just here to say, just like, calm down a little bit. Some of these some of them have like 50 coins as their, what's in their ETF. Like it's not that much. We're talking like $10-20 million of assets that are in these funds. So I would just calm down with these 11. I personally think half of them will not even be existent in 3 years from now. Because why would you pay 50 basis points, 75 basis points, 1% for an ETF on an annual basis? That's when you have such large companies like iShares and Fidelity that are doing it for 0.2%. It just makes no sense. And so hopefully they understand that as time goes on. I'm just here to say that what are you going to do about it? Because look how smart these people at Grayscale are. They know that people bought this thing when it was $1 a share, now $30 a share. So it's like they can't get out of it if they want to anyway, because there's such heavy tax consequences for doing so. It's actually kind of genius. Now, some would say it's very rude. It's not respectful for your legacy people, but they don't care. They know these people can't sell their investments if they wanted to anyway because of the tax burden on the upfront. Just last year alone, it went up 100%. But I will tell you this, within not even the first week, they've had almost $600 million get sold from the GBTC trust, from the now ETF, the Grayscale ETF, and most likely repositioned to these other ones. That would be my guess. These are people who just maybe recently bought it or bought at highs and really never made money on the product. So they didn't have a tax consequence. So instantly they pulled out $600 million. That's no joke, guys. That's like 2% of everything just got withdrawn almost instantly. So these are the things that people have to take into consideration, because when you start looking at a diversified portfolio and people are trying to say if this should belong in there, I don't know. This is so different, like commodity. The SEC says Bitcoin is a commodity. I'm not going to argue with them. I'm just going to say it's more of a digital currency. That's what they say it is. That's what everybody says what it is. But SEC is approving it as a commodity. I'm here just highlighting that there are still significant risks in this investment. So I'm just saying, be careful, proceed with caution. And I would probably just wait. Wait for what? Wait to see what happens. Right now, there is extreme volatility in the Bitcoin space. It's supposed to be an unrelated correlation to the stock market. How come the stock market is going down And Bitcoin is also going down. I'm just saying the new craze, there could be a lot of liquidation coming up, as I said last week, and just calm down, beware. The price of Bitcoin is not going to skyrocket and go to the moon as many suspected. There could be extreme volatility here coming up. So just yet again, commenting on things like that, because yet again, when you start looking at people's input on cryptocurrency and even gold's coming out. When markets are volatile, gold is always a big push for gold, though you should invest in gold. Like, it makes no sense. If you look at companies, or let's back up. If you look at just Bitcoin and even gold, and you just look at if something were to happen to the governments, right? People are saying, well, the governments can turn on you. Some people say, well, what if the government goes out of business? Or heck, we get hit by a nuclear holocaust. Okay, number one, like canned goods and ammunition is the new retirement account. That's like number one, right? But number two, it's like, it doesn't mean you can go to Starbucks and take a gold bar and it's like chip off a piece of it. And who's to say they're going to use cryptocurrency? Like, who's to say that even has a value? What, America is just not going to have a value anymore? It's just crazy to think how some of these conspiracists are talking about fiat currency and talking about how the government's biggest fraud. It's just not realistic. And I've gone down those Pandora box of what those people are thinking and saying, and it's just not realistic. So to invest in Bitcoin through an ETF, it doesn't make sense, right? Because you're still part of like the system, right? Even if arguably, if you're with Coinbase and Gemini, what do you think their servers are running on? These are Fortune 500 companies here that they do business with. It could be AWS, it could be Azure, it could be a lot of these web-based servers out there that their things are being hosted on, which, oh, by the way, are Fortune 500 companies. So if the world were to end, what we're going to be using are phones, Apple phones, which, oh, by the way, is a Fortune 500 companies, to operate on. Good luck with no software updates at that point. Guess where all their money is? In the stock market, which some crypto people are saying are going to go to zero. And they're in the banks. It's just kind of crazy to me when you start thinking about things like this. I mean, I'll go as far as saying, when you look at, if God forbid America got hit by a nuclear holocaust, and you start looking at the Cokes, the Pepsis, Johnson & Johnson, and McDonald's, like over half of the revenues are outside of the U.S. These are companies that like have to survive. You can't almost get rid of them because so many people are maybe dependent on it, number one. Number two, it's just a necessary product that the world needs. Like, these companies we can't afford for them to go out of business, like Procter & Gamble, for example. They have like 20 plus different companies that make them over $1 billion a year. Like, it's a important piece to the world. And so I'm just hearing people that are thinking that they're going to invest in this cryptocurrency that's going to have them retire early, and it's just insane. People said the same thing about NFTs, non-fungible tokens. How did that go? You know what I'm saying? Stay disciplined in your portfolio is my end result, is the commentary to you. Folks, we're going to go on a quick break, and when we come back, we're going to talk more about just having a diversified portfolio, if this makes sense. But we've seen this movie before. We've seen fads come up. You've seen on social media, people are talking about Stanley cups. It's a cup. People are freaking out over a cup. They're excited about a cup. It's a big cup that fits in a small little cup holder. I don't understand. It's the same thing with these fads that are going on in investments. They call them meme stocks. So we're going to come back. We're going to talk a little bit more about diversification. We're going to talk a little bit about more commodities after a few words. But if you have any questions, feel free to reach out to us. That's 855-963-2526. That's 855-96 Falcon, like the bird. We'll be right back after a few words. This is Gabriel Shahin, Certified Financial Planner, your host of More Knowledge, More Wealth. That's on every weekend. We're going over all important topics of personal finance. We're going over retirement planning, making sure you're prepared for retirement, social security and strategies, real estate, taxes, avoiding them now and in the future, investments, reducing fees, commissions, and so on, insurance, and estate planning. Folks, we are offering a free financial assessment that you could take advantage of. We have offices all across Southern California, including the Inland Empire. Give us a call to take advantage. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, or visit our website, falconwealthplanning.com. That's falconwp.com for short. Enjoy the show. We look forward to serving you. Welcome back, folks. This is Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth here every weekend. And we're talking about all important topics of personal finance. And today we're just discussing the simple things of Bitcoin right here. And what does that mean for you. And I just thought we'd take a step back and just talk about the whole reason you invest in anything is to make money. You have people investing in private placements in businesses to make money. You have people investing in the stock market, bonds, to make money. You got people in money markets right now because it's earning 5% to make money. Same thing with real estate, right? Because it could appreciate, number one. Number two, it can generate income. You got people staying there that will pay you money every month to stay in that place for rental income or investment property. Okay. Then you got cryptocurrency. People are thinking this currency is just going to continue to go up and up and up. And there could be some sense to that because of the mining and how there's going to be a reprogramming of the mining where it's going to have to go up to entice more miners to continue to mine for Bitcoin because not all of the 22 million coins have been mined. So I get all that. All I'm saying is taking a big step back is what do you need for your financial security, for your financial future? That's really the biggest question here. And when you start looking at the capitalistic markets and what is going on in markets today and how they continue to rise, I understand we have periods of duress, but if you look at the charts, if you look at history, and you look at reality, your company, how they're continuing to want to make money and to grow. Very few companies are saying, you know what, our goal for this year is to reduce our client count. Our goal for this year is to reduce revenues. You get what I'm saying? People want more and more and more, the benefit of capitalism. So the idea of restricting that is crazy. Now, there has been, like, JetBlue was blocked, or a judge said, no, you're not going to buy Spirit Airlines. I hate Spirit Airlines. My gosh. I had to fly there once to realize I will never fly there again. It's more expensive. You have to pay for your water, it feels like, let alone where you sit and the luggage and everything else. But the idea, not to digress, is that there are certain things that the government does come into play to stop. They call it monopolization because they want to make it competitive. That's the point of having a monopoly in a capitalistic market. A capitalistic market is promoting good costs. That's why I have places like California, one of the most competitive places to live, one of the most competitive places around. It's so aggressive on pricing. There are certain goods and services that are cheaper in California than other places across the country. Why? Because it's a free market over here. It's a non-compete state over here. You're allowed to compete aggressively on pricing in the state of California. It's necessary because it's so expensive to live here. So these are the things, when you look at a portfolio, you have to take some of these things into account. When you invest in the S&P 500, when you invest in mid caps, small caps, large caps, international, developed markets, and emerging markets, when you invest in growth and value and so on, you're investing in these companies, large, small, in all sectors, all across the country, all across the world. There's always going to be a need for them. My comment to you is, what are you doing in your portfolios today? Are you still heavily invested in growth? Are you still overly invested in Apple, in Tesla, in Amazon, in Google? Because these are the times where you really have to take a look at that and see, are these companies going to last long term? Now, they're going to be around long term, but is the growth trajectory going to last long term? This is where you have to take a look, because this is where high risk, high reward, because some of these companies are saying they're going to grow at a 40% rate year over year over year over year. What if that starts slowing down just a little bit? The compounding effect of that could be huge. That's why some of these companies and their analysis that they have is trading at 60, 100, 2,000 times what they're earning. What that means is it's crazy. They have to be in business for 2,000 years to make what they're currently valued at today. But remember, it's based on growth. Why am I bringing this up? Because that is complicated. Who wants to waste their time thinking about that? What's great today may not be great tomorrow. How about you put your money into a portfolio that could just grow consistently? Not guaranteed. Obviously, years like 2022 were very bad. Years like 2023 were very good. But over time, it does well. These portfolios target from 7 to 10+% annualized, depending on your risk level and your allocation. My comment to you is just figure out what the rate of return is that you need. And if you don't have to take much more risk than that, then don't. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here, and every weekend talking about all important topics of personal finance. And I'm just here mentioning just to you is figuring out what you have to do with your situation. Because with all this conversation of Bitcoin, with all this conversation of growth companies and the Magnificent Seven, these 7 biggest companies right now with Apple, Microsoft, Amazon, Tesla, Nvidia, Google, and so on, Facebook, it's easy to get lost in that excitement. But during times of duress, this is where value companies that are profitable, that are not looking for future growth at the extent that a growth company is, they already know their strategy. They already know their growth model. So my comment to you is, are you positioning yourself where you're able to just have those proper tilts in the portfolio where you're going to be fine no matter what happens? This NASDAQ, from 2000 to 2014, it was flat. 14 years without making money. Why? Because it got smashed in 2000, 2001, and 2002. It took 14 years for the market to come back. Well, we're in a higher interest rate environment right now. Historically speaking, it struggles. It has struggled, but not like that much. So you got to be careful with your investment strategy, and that's why diversification is key. I will tell you this. There's a lot of good indicators going on right now. I know half the analysts are saying there should be a recession and potentially a recession in 2024, and the other half say no. But when you start looking at peak inflation and what happens to the markets after peak inflation, both the bond and stock market significantly do well 12 months later. Now, 12 months later can go over 2 years. So when you look at the data of how last year or this year is going, it can be a bit misconstrued. We got almost $6 trillion in cash on the sideline right now. And historically speaking, interest rates fall fast. They fall fast. We're talking about under 2% in just 15 months after peak inflation because there is a high correlation with bonds. Currently, rates are about 5% yet, almost in a money market. The Fed said they're going to cut rates 5 to 6 times by 0.25%. That's 1.25 to 1.5% they're going to cut. You could be seeing under 4% rates, which means that could yield to under 2% money markets. What do you think that $6 trillion is going to do? It's going to need to be put to work. People are not happy with real estate. Why? Because it's still significantly overvalued. How do we know that? Try to get a loan. It's high. Try to put 20% down. Where it used to be you would have positive cash flow. Now you have negative cash flow. Makes no sense for investors. Institutional investors said no thank you. So what are you going to do? Most likely you're going to look to put your money to work in the stock market. You can either take that risk and find these great future companies. It's more of a crystal ball. You're either going to be right or wrong. History shows for one you get right, you've gotten 5 wrong. At least that's what academics have said and proven. And you can know that by Dalbar studies that show that individual investors like yourself has significantly underperformed the market, where the average return is 4% versus the market return of 10%. Why? Well, because you freak out. Markets drop, you want to get out. Markets go up, you get excited, you buy high. You literally buy and sell at the wrong times. Now, advisor returns is 7%. If individual investors 4 and advisors are 7, and the market's 10, well, how come the markets are doing, or advisors are doing worse? Well, number one, advisors don't invest all the money in stock. Part of the money's in bonds, so you don't get the full return of the market. Sure, there's fees incorporated in that, but typically they're about 1%. Think about that. Net of that, so really they got 8 versus 10, right? But the fee, let's just assume 1, it's really 7. And think about that. They're not taking as much risk as the market because a lot of them have bonds in the portfolio. And individual investors did 4. Not very good. Controlling emotion is huge and actually knowing what to invest in. Advisors don't care to play the stock picking game. They go into the index world. And it is consistent. Almost every single professional advisor out there, 99% of professionals fail to beat the index when you start pulling it past a 30-year period. And your horizon is 30 plus years. I don't care if you're needing to buy a house pretty soon or retiring pretty soon. You're not going to pass away right after you buy a house or retire. You need that money to continue to grow. Folks, this is why people reach out and want to do a free financial assessment to understand what their goals are, what they're doing, and how they should be invested, and making sure they have the proper tilts. This is the best time to do it. When you start looking at the valuations right now of value companies and international companies, there's a significant underweighted in people's portfolios, and they are struggling in regards to valuation, which means There could be some positive outlook there. I'm not saying to go buy it. I'm saying take a look at your situation, your current allocation, and how it could help you. Folks, if you need help with this, give us a call. We've got offices all over. We're offering 1 to 2 meetings, 1 to 2 hours of our time, folks, at no cost. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, where we can help put together a personal assessment that can answer these questions that you may have. We started off with Bitcoin. I mentioned gold. If you look at holding on to gold from when it came out in 2004, you have significantly underperformed the market. I'm not saying that could be the same thing with Bitcoin because Bitcoin is so speculative. Heck, they don't even know who invented it. I'm just saying people are asking so many questions about Bitcoin and spot Bitcoin ETF, if they should invest in it. And I'm just here to say it's too early. Could it make sense? Sure. You want to put some money in it? Fine. But be prepared where it could go to zero. It's not unlikely. Just because the SEC approved it, SEC's job is to protect you, not to understand that the investment is going to be good or not. That's why it's a bit shocking to some companies that said they're not going to offer these ETFs. I mean, I get it, but who are they to say what's speculative or too speculative for you? You have some crazy leveraged ETFs out there where if you put in $1 million over a 6-month period, if it goes up 1%, down 1%, up 1%, down 1%, those 3x leveraged ETFs, your money would go to zero. So those are okay, but other indices are not. Other asset classes are not. That's a bit crazy to me. So, folks, if you need help, give us a call. We would love to help with your guys' situation. My job is just, yet again, to give you information of what's out there and to keep you on track and not to get swayed and distracted because there's so much noise out there. And I know people that bought the ETFs right when they came out of this Bitcoin and they're already down 5+%. It's unfortunate, almost 10%. So, folks, if you need help with this, give us a call, 855-963-2526. That's 855-96-FALCON, like the bird. Folks, that was a fast show, and thank you for tuning in with us this weekend. You can always reach out to myself or any one of my colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can get this episode, any one of our previous episodes as well, through Spotify, iHeartRadio, or the Classic Podcast. And by the way, that Knowledge Center on YouTube, subscribe to that. There's so much good content coming out where we're getting a bunch of views on a daily basis. Folks, I want to thank you for tuning in with us. I want you to have a fantastic week, and God bless.